joined today by Scott Williamson, Managing Director of Horizon Gold. Scott, thanks for your time.
No worries.
Since we last spoke, there's been a lot of activity out of Gum Creek in Western Australia. Talk to us about some of the results and what they mean to the development of this project.
Yeah, the recent announcement is around our oxide, shallow, high-grade hits at Swift, or Eagle and others. So these are oxide open pits within 2 kilometres of our proposed processing facility. What it's doing is adding ounces to the mine plan. We're looking at nice, shallow, high-grade oxide feed. Really improves our economics on our study work that is ongoing.
You talk about the expansion of the resource at Gum Creek. A number of new projects have opened up, high grade, nice little projects that you can add to the resource profile at the project. How do they change the economics and the thinking around how you're going to develop this project?
Yeah, so our initial mine plan has about 7 to 10 years of open pit mining. So this will just extend that. But more importantly, it's within that 2 kilometre radius of the mill. It's high grade, it's from surface, it's oxide, so it's good processing. We're adding ounces at about $20 an ounce. So it's really strong return on investment. So yeah, very easily we can step along strike of all of these oxide open pit mines and extend them. Eagle, for example, we've extended 300 metres to the south. So yeah, it is like shooting fish in a barrel, really, just extending oxide open pits. Yeah, it's great oxide feed for that mine plan.
And at Omega, you've been able to extend about 120 metres below the current workings. What does that tell you about the potential for an underground operation?
Yeah, so Omega was previously operated as an underground mine, quite high grade. So we're expecting grades in the order of up to 4 to 5 grams per tonne. So we'll be able to extend the mine there at depth. So yeah, it's a smaller underground mine, but what it does is it can displace our open pits. So our open pits are running about 1.5 grams per tonne. So what we can do is bring in the Omega underground, hopefully quite early in the mine plan. That'll be all outside of the current study work. But what it could do is boost our ounce profile above that circa 100,000 ounces per annum, which we're getting from the open pits.
Feasibility study due mid this year. What are some of the outputs that investors should be looking at as you get closer to that investment decision?
Yeah, so we're looking at that 2.4 million tonnes per annum, delivering about 100,000 ounces per annum, minimum 7 to 10 years. We're hoping that this mine will be around for a couple of decades. So yeah, low cost, high margin ounces, particularly in those early years, which really helps the NPV. At today's gold price, really strong return on investment, paying back capital really quickly. So it's a great time to be looking at gold mining in Western Australia.
You've just raised $30 million with 20 million of that earmarked for exploration, 4 rigs on the ground, lots of results coming. What's the theory behind the exploration work you're doing and how does that feed into your investment decision?
Yeah, so we're going to spend, of that 30 million, 20 million will go into exploration. Not because we need any more ounces, we've got 2.3 million ounces already. But what we want to do is show that this mine will go beyond 10 years. And so that exploration really extends our mine life beyond 10 years. Also brings in some higher grade early in the mine plan as well with these underground mines. So yeah, it's a sort of dual-pronged approach about extending mine life, but also bringing in higher grade underground mining early in the mine plan to increase that NPV.
Strong news flow, exciting catalysts, a lot to happen in the next 6 to 12 months. We look forward to watching with interest. Scott, thanks for your time.
Thank you.